succeeded in. Give us just about a minute and we are ready to power into our next session. Thank you, sir. Appreciate it. Thank you. Thank you, sir. Appreciate it. Thank you. Thank you, sir. Thank you. एक सेकंड अनाउंस कर दो. Allow me to quickly introduce our next session. We are back to business, literally so. Our next session, middle class, the new bulls in the market. To take it from here, inviting on stage moderator Siddharth Zarabi.
Gives me great pleasure to call upon stage and introduce Madhusudan Kela, promoter of MK Ventures, one of the most well-known faces in the Indian market. We are also joined by Nilesh Shah, the managing director of Kotak Mahindra Asset Management company. Again, someone who is seen on television channels all over the media, not just for his views on the market, but the broader economy and India's growth story, and also Pramod Gubbi, the co-founder of Marcellus. Three of the best market gurus that India has produced. And thank you very much for your time with us today. I was wondering when this session was going on whether defense stocks would be reacting to points like Atmanirbhar Navy as far as production is concerned, 54 ships on order, and perhaps many more to go. We are also seeing news items as we practically walked in of more orders being placed as far as fighter aircraft is concerned, and we know what's happening in the defense space. But before I dive into this session, ladies and gentlemen, just some data points for all of you to appreciate why this session and why is it significant. The National Stock Exchange has just put out some data which says that there are 120 million unique investor accounts. So there is total number is around 235 million, 120 million are unique. 1 in every 4 women of these investors are women. 99.85% of India's PIN codes are covered. These investors are present across 99.85% of India's PIN codes. And the 3 states with the highest. And this might surprise some of you and may not surprise some of you. So Maharashtra is obviously leading with 19 million investors, Madhubhai. But UP comes second with 14 million and Gujarat with 10.3 million. So, you know, this is a bit of how India has changed, particularly in the last 4 years. And I want to get these 3 experts here to talk about why it has changed, what is the current phase, and where do we go from here. Madhu, I'm coming to you. Explain for the lay viewer, to the public, why is this happening in the last 4 years, this huge increase? Is this people being greedy? Or is there a new investment, save, invest, prosper culture that is now happening in India?
Yeah. Siddharth, first of all, thank you for having me. I've interacted many times with you in the past, so great to catch up again. So I would say the latter is true. I don't think it is purely driven by greed. Investing in equities, or at least over the last 5 years, looks like a culture. And equity today, in my understanding, is an accepted asset class among investors. So all of these numbers which you shared, obviously a lot has changed in the last 5 years. Let me give you a 5-year back picture. So that 12 crore investor you said maybe was less than 2 crores 5 years back. The market capitalization was $1.2 trillion in COVID lows. Today it is $5.5 trillion, right? And let's not forget the gold prices, which have gone up 3.5 times. So as per earlier estimate, 5 years back, India had $1.5 to $2 trillion worth of gold. So that number would be maybe $5 to $6 trillion. However, there is no real data officially available on the gold holding. At least I don't know of, right? So there is a tremendous wealth effect which has happened in India. 100% of gold appreciation belongs to Indian, and 85% of the stock market appreciation actually belongs to Indian. Only 15% of our market is owned by foreign institutional investors. So whether they're promoter or retail investors. So people have actually made a lot of money, right, in the last 5 years. Now the question is, has everyone participated into this? So the answer is a clear no, that, not everyone has participated. The people who are left out, they are beginning, they are starting somewhere. So when you go to tier 2, tier 3, tier 4 cities, you can clearly see it, that, there is a lot of also left out feeling among the broader investing group. And mutual fund investing, specifically the SIP, has generated consistently over the last 20 years superior returns than bank deposits. So maybe that fact is also catching up.
Absolutely. Nileshji, in fact, this bit about bank deposits is a macro factor and a worry in some quarters because the financialization of savings is happening. But the Atmanirbhar market point that Madhu made, and Uttar Pradesh having the second largest number, this was unimaginable 20 years ago. What is behind this?
So thank you, Siddharth Bhai, for having me over here. I'll attribute this to kal aaj or kal phenomena. So जो कल था वो grandfather के जमाने के थे. They invested in EPFO, Provident Fund. Today, Provident Fund corpus is about 25 lakh crore. As on March 24, March 25, it will be 30 lakh crore. And there are more than 7 crore subscribers. So on an average, after investing for so many years, subscriber is making about 3 lakh rupee. Fast forward to NPS. It was introduced only in 2004. Total corpus is now about 14 lakh crore. A number of real subscribers, excluding the NPS Vatsalya scheme and stuff like that, is about 1.2 crore. Average subscriber wealth is about 11.24 lakh. 3.34 versus 11.24, कल की generation को समझ में आ गया. Then आज की generation and the father generation, they went into PPF, and if they invested about 1.5 lakh rupee for 25 years, principal investment was 37.5 lakh rupee. It grew to about 1.1 crore tax-free. The same money invested in equity-linked savings scheme, average equity-linked savings scheme, not the best performing, 37.5 lakh crore would have gone to 4.4 crore taxable. 12.5% tax निकाल दो, still 1 crore versus 4 crore. वो आज की generation को समझ आ गया. अब आने वाली कल की generation है, which is the son and daughter, they have seen benefit of startup investing. Their dreams are getting wings with the startup investing. So this phenomena is the kal aaj or kal realizing that real wealth is made by partnering with India's best entrepreneurs.
Okay, real wealth is made by partnering with India's best entrepreneurs, and this is a very important point because we are here at the India Today Conclave and we discuss the broader economy, the political economy and general politics. In many years ago, I would say entrepreneurship and private sector capital was a vilified term, and it was believed that all companies are robber barons, and this was alleged. But Pramod, coming to you, is there a downside to this? Because if we were to go into that data, the median age of the investor, particularly ones who have come in now, the point that Nilesh also made, is just 33 years. So let's imagine somebody enters the workforce at 23. He has just 10 years and he is putting in far higher amounts of his surplus capital into the markets, Pramod.
Yeah, thank you. Thanks for having me here. I think the answer is in your question itself. And like Nilesh Bhai said, we're an extremely young country from a demographic perspective. And given that equity is a long-term asset class, the fact that our average or median investor is young means that he has a long runway to deal with short-term volatility. And I think Nilesh and the mutual fund industry have done a phenomenal job in terms of creating this awareness that you're not here for a quick buck. There are ills on the FNO end of the spectrum, which I think the government has recognized is fulfilling. But long-term investing in equities through mutual funds in a systematic way through SIPs is tailor-made for India's demographics, because these kids at 30, 33 still have 30 years to go before fulfilling their retirement goals. If not India, who else would take this longer-term risk? Having said that, yes, there are shorter-term risks which will play out. We've had 5 quarters of single-digit earnings growth, valuations are high, there are plenty of risks on the geopolitical side, trade and so on. But as long as we create this awareness, that the real risk is not about losing your money. If you're talking about risk of going through temporary slowdowns, I think the onus is on us, all three of us in the rest of the industry, to educate and ensure the investor stays invested. And as Madhu was saying outside, that if you look at people who've invested 20 years ago, we've been through several downturns, right? I mean, the GFC or Lehman crisis was a 60% drawdown for the market. Despite that, people who had invested prior to that are sitting on significant wealth creation. So the onus is on us, and luckily I think the spread of social media, it has its downsides, but it gives a platform for all of us to communicate effectively to the end investor that this is the real benefit, rather than trying to get swayed away by instant gratification. If you focus on your financial aspirations, for a young country it's all long term, and build a portfolio to stay invested for the long run, the outcomes will be good, provided you have the emotional bandwidth to go through the shorter term, inevitable short term downturns.
Madhubhai, will the outcome be good for all investors? Because this is also a learning, particularly in derivatives, that perhaps 9.5 out of 10 people actually lose money in that. But will the outcome be good for all investors? Because I see it as a business journalist myself, everyone and their auntie and uncle is investing in the markets now.
But the people who are speculating in derivatives, you don't call them investors.
They are traders.
They are speculators. They are traders, right? So I don't know, because I don't speculate in the FNO market, so I don't know the outcome about that. But I have been in the mutual fund industry for 15, 17 years. So Siddharth, just to give you a context, the Reliance Growth Fund scheme which we started at 10 rupees. When I left, it was 1150 rupees. That was 2016. Today we are in 2026. It is 4,000 rupees.
10 rupees.
10 rupees.
Is 4,000.
So, and has it gone through ups and downs?
Of course.
Of course it has gone through ups and downs. There are various instances wherein 25%, 30%, 35% corrections would have happened in NAV over the last maybe 25 years, maybe 5, 7, 10 times, right? But all investors, I repeat again, all investors who have had faith in India and have a long-term view have actually ended up making money. See, the risk, Siddharth, is what is the risk in the market? Biggest risk. As Pramod was saying, the risk is not of losing. The risk is of time frame. So if you want to make money in 6 months, you say that I have 1 lakh rupee because मेरे पड़ोसी ने 1 लाख का 1.5 लाख कर लिया, कोई individual share लेके, and I am trying to replicate that, and I want to do it in the 6 months, without understanding, without knowledge, based on some tip. So that is the risk of losing money. But if you have the time frame, and if you are not leveraging, and if you are doing the asset allocation properly in a sensible manner, you will continue to generate, I think, superior returns than bank deposits or any other form of investment which I know of, which is liquid, like whether it is debt, bonds, fixed income of any form. You will continue to generate that return, I think, over the next 10 years. Now, let me warn you again, The last 4-5 years have been exceptional in terms of return, except last 1 year. Because in COVID, we made a very, like a unreal bottom.
Correct.
Because of the events, right? So the prices were very, very low. So from there, the returns, obviously, markets have come to average or it's gone above average. So returns have been exceptional between 2021 and 2025 period. Last year is kind of little lull. So people, if you are extrapolating again, that because I made, let's say, 30% CAGR return for the last preceding 4 or 5 years, I will continue to make that. That is again a fallacy. Because in the long run, you will only get your equity premium, which is, let's say, fixed income is 7%. So you may get 5, 6, 7% higher than the equity, than the bank rate.
नीलेश भाई, कल वाली जनरेशन को किस टाइप की रिटर्न्स के साथ संतुष्ट रहना चाहिए, क्योंकि मार्केट्स और संतुष्टि दोनों साथ साथ रहनी चाहिए. द पॉइंट दैट मधु मेक्स दैट यू शुड नॉट become very greedy or expects outside returns because the one-off phenomenal events have happened.
So returns will come with your risk-taking ability. Someone who wants to take high risk should expect higher return. Someone who doesn't want to take should expect lower return. But you will grow and prosper.
Sorry to interrupt you. Is the trader a higher risk person? Are they those who are tolerant of higher risk, or are they just being too greedy?
So most traders are greedy, and few successful traders are higher risk taker. If you are trading against a person who has better connectivity through co-location, better algos, and better computing power, how are you going to win against them? That guy has ability to take risk. He has access to infinite amount of capital. Against that, a greedy person doesn't stand a chance. There's a very good saying in the market: people with money come, lose money, get experience. So there is greedy people, there is smart people. We should not fight smart people. But risk and return will go hand in hand. You take higher risk in, let's say, small and mid-cap, micro-caps, volatility will be high, but your returns could be good. If you're conservative, you go for large caps, your volatility will be less, you will make less return. The most important thing which an investor should focus upon is asset allocation. There are opportunities in precious metal, there's opportunity in performing credit. There's opportunity in venture capital, startup investing, unlisted segment. So please diversify your portfolio so that you have a better ability to withstand volatility. Mutual fund or investment is not just equity. There is equally other components like performing credit, precious metal, REIT, InvIT, and so on and so forth.
So since you said a precious metal, one quick quote before I go to Pramod. सोने का क्या होने वाला है?
So as long as global central bankers behave like Indian housewife, एक बार सोना खरीद लिया बेचेंगे नहीं, तो सोना will continue to rise. But one point of caution, like lab-grown diamond came and crashed natural diamond prices, please put a Google alert on lab-grown gold. There are two instances of manufactured gold or a lab-grown gold. One in CERN, Large Hadron Collider, where for a few nanoseconds, lead was converted into gold in few nanograms. It didn't stay there, it disappeared. And the cost was prohibitive, so they haven't repeated that experience again. Second, in US, a startup has converted mercury into gold through nuclear fusion. Again, this is very costly today, and it's not stable. But keep a Google alert on lab-grown gold. Till such time lab-grown gold comes, I think central bankers will ensure gold prices remain higher.
Okay. Pramod, I want to ask you on the bit about advice. Who is tomorrow's successful investor going to be? Someone who does old-style research, follows experts and market masters like you, or goes to an artificial intelligence tool? How will technology, along with other market forces, influence the investors' experience in the years ahead?
Right. I mean, when it comes to fulfilling your long-term financial aspirations, I think, like Nilesh said, asset allocation is the best way, right? And today there are plenty of tools available which can give you, based on your risk appetite, allocations to different asset classes like equity, fixed income, real estate. And like Nilesh Bhai said, at the end of the day, the diversification helps reduce the volatility. And this is a very important aspect. While we can all wax eloquent about long-term investing, go through downturns, what Daniel Kahneman has taught us is evolution has made the human mind averse to losses. And that's a reality we need to expect. And as a result, if you can't diversify across asset classes, you will eventually take the wrong decision, which is getting out at the bottom of the market or coming in after a euphoria. With respect to stock market investing, I think we ourselves are realizing some of the benefits. Within Marcellus, we've tried to implement Notebook LLM as our default choice for first cut research. For example, for a first cut research on a new company would take an analyst about 15 days. Today we can get there in 15 minutes. It's not 100% accurate, so it doesn't mean that AI will get you the insight. At best, AI is a productivity booster. So instead of having a 10-member research team covering 500 stocks, today we can potentially do 2,000 stocks with the same bandwidth capability. So at the end of the day, AI can only be a tool. It's not going to give you a blinding insight which a human being couldn't have arrived at. How you use those tools is up to people. For the retail investor, I still think that you're better off investing in mutual funds where there is a professional manager. Not because any of us professional managers have any better skill. It's just that it's, it's what we do for a living. So it's the hours of the day which is spent in researching, analyzing, and understanding which gives us an edge. Perhaps we've all made our mistakes, so you sort of piggyback on our mistakes rather than you trying to make those mistakes. But there are startups which are trying to democratize investing, right? Like I said, AI tools being available to the retail investor. Suddenly, like a professional fund manager with a 20-man research team, a retail investor could potentially have a research team at its beck and call, but it's not human beings, but AI. But very early signs, we're watching this space because, it puts us at risk because it democratizes stock market investing.
Nilesh, I'll come to you quickly before I go to Madhu for the last point on this. This mutual fund sahi hai is a very popular line that everyone understands. But, we are planning our next annual mutual fund issue. And one of the research points that we got was that there is just too much of choice in mutual funds. There are like hundreds and thousands of schemes and it confuses people. At the industry level, are you thinking about this for the general population, not the very aware investors, to make mutual fund आसान along with सही?
Very fair point. But पहले तो सिद्धार्थ भाई मुझे म्यूचुअल फंड सही है प्रूव करना है लोगों को. ये सबके पास करेंसी नोट घर पे पड़े हैं, जेब में पड़े हैं. The total currency note in India is 38 lakh crore. The total investment made by people after seeing Madhubhai's performance of 10 to 1100, and there are many such schemes, is less than that. I'm yet not able to convince the crowd that घर पे पैसों के झाड़ नहीं उगेंगे. आपकी करेंसी नोट हर रोज डेप्रिशिएट होगी. मेरे म्यूचुअल फंड में आ जाइए, थोड़ी पिटाई जरूर होगी, लेकिन इवेंचुअली आपको पैसा बना के देंगे. तो पहले तो मुझे म्यूचुअल फंड सही है प्रूव करना इन लोगों को जो करेंसी नोट पे बैठे ये उम्मीद में कि पैसों के झाड़ उगेंगे. आसान भी करेंगे. There are total about 1800 schemes. I will say just one scheme for an average investor, multi-asset allocation fund. Today, if you are rich, you will get private banking service. Mutual funds have created a product which gives India's best fund manager to allocate into debt, equity and precious metal. एक ही fund में invest करिए. If I take average of multi-asset allocation funds return, it has outperformed 99% of investors. आप चीजों को मुश्किल मत बनाइए. आसान चीजें आसानी से accept कर लीजिए.
Acceptance is key. Madhu, as we come to the end of the session, I'm reminded of many years ago when you had mentioned that the you'd given a call for the Sensex at 30,000, and many people at that stage didn't.
At 3,000.
At 3,000, and many people didn't believe you, and they said, "What is this? You know, he's driving up the market." But I have to ask you this question today: what's your call for the Nifty and for the Sensex?
So, Siddharth, I vividly remember the Sensex was 3,000 and you interviewed me and we discussed, can it go to 30,000? And you asked me 3 times. I still have that clip. I said, yes, it can go to 30,000. Rather, I said, it will go to 30,000. I don't know when. So not only it has gone to 30,000, it's come to 85,000 now. Siddharth, it will continue to grow. It will go to 1 lakh. It may go to even 2 lakh, right? But we don't know the time frame, right? The time frame is uncertain. The trajectory is clear that we are on an upward trend. In India, the trajectory is clear. And I would say, let me just sum up again. I don't think we could comprehend what I was saying in the first instance, that we have had $8 trillion worth of wealth effect in India in the last 4 or 5 years. This, to my mind, is the biggest bonanza given by the government to Indian public. You know, because this is clearly, as I said, 85% of equity wealth creation is owned by Indian people or Indian companies, Indian entrepreneurs. 100% of gold appreciation is owned by the retail public. So this kind of money which is being made will pursue a lot of people जो अभी जेब में cash लेके घूम रहे हैं and who don't yet have not appreciating the power of compounding and the power of returns on the equity side. They will come.
Absolutely. Viewers and the audience here, take those words. Greed doesn't work in the markets. Patience and understanding and believing in the power of compounding. Madhu Kela, Nilesh Shah and Pramod, thank you very much for your time with us today. Back to you, Preeti.
I hope we got some good insights and tips there. With that, ladies and gentlemen, raise a warm applause for our esteemed panelists while I call upon Mr. Mudit Dalmia, Vice President, NL Dalmia Educational Society, to come up on stage and present a small token of our appreciation to our panelists. What we are also going to do, once again, ladies and gentlemen, please put your hands together. Raise a warm applause for our 3 panelists who gave us some sterling advice, especially where most of us come from, the middle class. Sound financial advice. Thank you, ladies and gentlemen. What we're going to do is take a 30-minute lunch break. We reconvene here exactly